Hello, I'm Addison Morse, the founder of the Women's Cannabis Chamber of Commerce, and this is Cannabis Clip Notes with Judith Dyer. Judith has 20 years of experience in financial management, comprehensive financial reporting, and financial planning. Her areas of expertise include cash flow management, cost analysis, and treasury activities. Judith is a DOPE CFO certified advisor. She works with cannabis companies to navigate 280E and meet cannabis accounting requirements, ensuring that her clients' businesses maintain financial health and stability. Judith, what are the key points businesses in the cannabis space need to know about inventory, valuation, and cost of goods sold?
Hello, everyone. Hi, Addison. Thanks for having me today. As we dive into one of the most critical topics for cannabis businesses, inventory valuation and cost of goods sold, these areas are not only foundational for financial reporting, but also vital for compliance with regulations and optimizing profitability. Today, I'm going to guide you all through the nuances of inventory valuation and cost of goods sold, emphasizing best practices tailored to our unique industry. So, in any business, inventory valuation impacts gross profit, tax liabilities, and financial health. For cannabis businesses, it's even more critical due to IRS Section 280E. Since deductions for ordinary business expenses are not allowed, accurate cost of goods sold calculations are the only way for you to reduce your taxable income. So, a little step back. For inventory valuation, it refers to how you track your cost of goods on hand. This includes everything from your raw materials to your finished products. And the way that you value inventory impacts your overall profit margin and, of course, your taxes. There are several different methods of inventory valuation. Each of them have their own benefits and drawbacks. But FIFO, which is first in, first out, LIFO, which is last in, first out, and the weighted average costs are the most commonly used methods in the cannabis industry. The method that a business chooses should reflect their flow of their inventory. For cannabis businesses, the method has to align with how you track your products at different stages of productions and sales. So, for cultivators, inventory includes everything from seeds, clones, and plant materials in different growth stages to finished flower or concentrate. These products aren't just in your business, they're also a work in progress. So, inventory valuation can be very complex. The challenge here is tracking what's usable and what's not at different stages, whether it's a raw material or a finished product. The costs that go into inventory for cultivators include labor, soil, nutrients, water, utilities, and anything that's directly related to growing the plants. For processors, you're going to be dealing with raw plant materials such as trim or flowers and semi finished products like extracts and finished products like edibles and concentrates and etc. Um, Inventory valuation for processors often requires a method to allocate costs for each stage of production, whether it's extraction or testing. You'll also need to account for overhead costs like equipment depreciation, utilities, and packaging materials when you're calculating your ending inventory balances. For cannabis retailers, inventory valuation focuses on the products you sell to your customers, whether it's flowers, concentrates, or edibles. You'll also need to track any packaging materials. Typically, retailers use the first in, first out FIFO method for cannabis products since cannabis flowers have a shelf life. This means that the first products purchased are the products that are sold first, and they typically come across challenges that include shrinkage, which is losses due to theft or damage, and the fluctuating demand that can affect your stock levels. So when we get into calculating the cost of goods sold in cannabis, um, this is now moving the cost associated with the inventory from the balance sheet. Once it's now sold, you're now moving it over to the income statement or your profit and loss statement. So the cost of goods sold refers to the direct costs associated with producing the goods that you sell, whether it's cultivating the plants, processing them, or buying finished products for resale. Cost of goods sold excludes things like rent, advertising, and wages for staff not directly involved in production. In the cannabis industry, Section 280 of the IRS code severely restricts what you can deduct, making accurate cost of goods sold calculations crucial for your tax liabilities. So, for cultivators, um, the direct costs included in cost of goods sold are items like labor, seeds, nutrients, soil, and utilities used in the growing process. These are the costs that go directly into producing the cannabis plants. It is essential to keep track of what's classified as a direct cost versus a non deductible expense. For example, you can't deduct your general business expenses under 280E, but you can include them into your direct cultivation costs in your cost of goods sold. So, key cost of good items for cultivators would be labor of those directly involved in the cultivation process, the equipment or the depreciation of the equipment used in the growing process, and your utilities like your water and your electricity. For processors, your cost of goods sold would include all of the cost of the raw materials, such as your cannabis flower or your trim, your the labor involved in the extraction process, and any costs that are directly tied to transforming these materials into a finished product. Keep in mind that manufacturing overhead like rent and utilities can also be included, but only to the extent that they're directly associated with the production process. And another key point for processors is ensuring that costs related to testing, packaging, and labeling are properly allocated to your cost of goods sold and not to be confused with general administrative expenses. If you want the deduction or the benefit of the taxes, you want to make sure that they're flowing properly through inventory and then into your cost of goods sold. So for retailers, your you calculate your cost of goods sold based on the cost of your purchased inventory. So this is the price that you would pay to the price that you would have paid for the cannabis products that you're selling to your customers. So, for example, if you're buying cannabis flower from a cultivator, your cost of goods sold will include the price you paid for that flower. Um, Additionally, retailers can include packaging materials and any other labor that is directly involved in stocking and preparing products for sale. So remember, with 280E, you cannot deduct things like advertising, marketing, or wages for employees that are not directly involved in handling inventory. So it's essential to correctly allocate those costs. Um, because cannabis businesses are prohibited from deducting normal business expenses under 280E, calculating your cost of goods sold accurately is more important than ever. Failing to correctly allocate costs can lead to IRS audits and penalties. It's essential to follow IRS guidelines and be diligent with your bookkeeping. So, to ensure your cost of good calculations work with To ensure accurate cost of goods sold calculations, you should work with a dope CFO certified advisor or another a cannabis accountant who understands the complexities of 280E in the cannabis industry. It is imperative that you keep detailed records such as invoices, receipts, and timesheets so that you can prove the direct cost of production. And you should also invest in good accounting software that is designed for cannabis businesses. This can make a huge impact on making a difference in making sure that you're properly tracking all of your data. And then you also want to ensure that you are separating your direct costs from your non-deductible expenses and track any overhead expenses that can be allocated to your cost of goods sold, like your utilities, your rent, and your direct labor. Um, so inventory valuation and cost of goods sold are critical for compliance and profitability. Accurate record keeping and expert guidance are essential, and compliance with 280E requires meticulous tracking and cost allocation. Yeah. So, in conclusion, proper inventory valuation and cost of goods sold calculations are not just accounting tasks, they are strategic tools that can help your cannabis business thrive in a challenging regulatory environment.
Now, this is the second Cannabis Clip Notes in a 5-part series presented by Judith Dyer. Inventory valuation and cost of goods sold can be viewed on the Women's Cannabis Chamber of Commerce, LinkedIn, Facebook, and Instagram. The entire series will be available on the Women Cultivating Success directory starting in January.